Good morning and welcome to Cervello Live. Today is the 4th of June 2020. I'm back in the office, which I'm really enjoying. Hope you're doing well. And just so you know, we are, if you are watching this on Facebook, we are live if you're watching it live. So feel free to ask any questions, financially, HR, accountancy related, because if I don't know the answer, I'm sure that one of our guests who we've got coming on in the future is going to be able to answer that question. And it really helps us make sure that we've got guests who are relevant to the sort of financial queries and questions that you've got, so we can make sure that we're helping you through this time. But hopefully the world is sort of getting back a bit back to normal for you, and it certainly is for us, so that's really good. Today I'm joined by Steve Chilton. Steve, how are you?
Not too bad, mate, thank you very much.
Good, thanks for coming on. How's life getting back to normal for you, if it is?
It's getting there slowly but surely. I think, like with everybody, I think there's been a period of unsettlement and just trying to get into a bit of a routine. I think a lot of people are probably working from home, and it does kind of change your working day a little bit. But I think we're getting slowly back to normal now. It seems like things are beginning to pick up now. We're getting a lot more inquiries on the insurance side of it. So fingers crossed. Normal service may be resumed over the next month or so.
Well, I think it's going to be a transition, isn't it? And there will be some things that change permanently, but hopefully we can get back to a sense of normality sooner rather than later. So we've got Steve on. We're going to be talking to Steve about the world of insurance, talking about how the coronavirus has changed insurance and the sort of risks you need to be thinking about, and exploring how if you run a business, sometimes the risks that you need to focus on are uninsured or underinsured, and we want to make sure that you know what you're doing in terms of making sure you're protecting you and your business against those risks. But before we do that, I just want to, Steve, what I typically do on one of these shows is I talk about a financial planning concept first, and then we'll come and interview you. So I'm going to talk about that first, and we can go from there. So what I'm going to talk about today is why planning for your financial future is a longer term game. And one of my favourite phrases, one thing that I want to mention, and I mentioned this last time, is that a couple of the issues that you want to make sure that you're thinking about when you're making your financial plan. And I'd always start, when you're building your future, is to start with your plan. As Churchill said, planning is important, even if the plan goes wrong, and the coronavirus has shown us plans can go wrong, but the process of thinking about what you want for your future life, not only in terms of money, but in terms of freedom of time, is an important thing to start with. And then you start getting practical. So you start thinking about, and again, this is something that Steve's going to be talking about today, how do you protect what you've got? And that might be business assets, that might be your own livelihood. Certainly one of the things that we do for a lot of clients, particularly the ones who run businesses, is make sure that their family is protected in the event of their death, and they're protected in the event of serious illness or loss of income, because again, the risk of that is really big, and that's something we talked about in quite a lot of depth in last week's show. Then one of the important things you have as part of your plan, and this is probably before you look at saving and investing, is focusing on paying off expensive debt. Now, currently, if you've got a mortgage in the UK, the odds are that that's not a particularly expensive debt. It used to be in the 70s and 80s, but interest rates are so low that now it's not. But certainly store cards, credit cards, some personal loans are expensive debt, and what we'd recommend as part of your plan is making sure that you've got a plan to pay off expensive debt. Then having a pot of money that you can get access to any time, sitting in cash, that's your emergency fund. Then look at medium-term goals. then look at longer term goals, and the aspiration for that is got to be financial independence. Now, why don't I use the word retirement? I think if I'm honest, Steve, retirement scares me a bit personally. How do you feel about getting to a point where you're not working again?
I think it's like with anything. I think work is such a key part of your day-to-day life. I suppose not actually having it, it's just. I suppose it's like with obviously looking at my own partner and the fact that she's been kind of furloughed and her not having that routine. It takes an enormous amount away from what you're used to dealing with day to day. So, I mean, personally speaking, I can't imagine me retiring early because I like the routine of getting up and doing a day's work each day.
Yeah, and you know what's interesting? All the research says that work is part of our identities and contributes to our well-being. So the work you enjoy, work you love to do, and Steve, if you're anything like me, you're lucky enough to enjoy the majority of the work you do. Some of it can be annoying, but I think that's like any role. But certainly if you enjoy the work you do, why would you retire if you can continue on? I think the key factor is having the choice. So having building enough wealth over a certain period, so that you've got a choice to do that. And that's what we do with our clients. You know, a lot of our clients have got enough money so they never need to work again, but choose to work because of it's a positive part of their life. You know, they like doing it. But that goal of financial independence is what we'd want to include in every single financial plan. But actually, that financial independence takes time to build. And I like the Chinese. The old Chinese phrase that the best time to plant a tree was 20 years ago, and the second best time is now. And interestingly, when a lot of clients approach us to build their financial plan, they know that they're in their mid-50s. They've probably built wealth through pensions, through work or property and element, but they know they need to do a bit more. So our job is to make sure it's on track. And effectively, even though you sort of might know that you should have done it before, it's always now the time to start thinking about that financial plan. I just want to talk about why financial planning is longer term and some of the things to avoid. Now, I'm seeing a lot more, especially since the coronavirus, scams popping up on my social media feeds that you should avoid like the plague. So if you're seeing exciting investments in international property, investments that guarantee really high returns, they're probably a scam and you should probably almost definitely avoid them. Just the reality of of this situation is there isn't a short-term fix to a longer-term challenge, and we need to remember that when we're thinking about our financial planning, we're building a level of wealth that's meant to last the remainder of our life, and that won't be fixed overnight. So you need a bit more of a strategic way to deal with that. And what won't fix your financial plan is a product. So where this process starts is understanding what your goals are, not only from a financial perspective, but where you want to get to in your own life, and that's the sort of conversation you want to have. What to look for in terms of the things that you want to focus on. You want to have a longer term strategy when it comes to financial planning, you know, and a place to review it on a regular basis. You want to make sure you're investing based on the evidence, not based on speculation. And thankfully, there's loads of academic research that tells us the best way to invest. And every single time it needs to be linked to what you want to achieve with your life. And we use a strategy because a lot of our clients are in their early 50s, built businesses, have built wealth already, but are thinking about what happens next. We use an analogy called NEXT, and that involves a 4-step process, and this is the process that even if you haven't got a financial planner or you don't want to work with a financial planner, this is the sort of process you want to be thinking about. Step one is navigate. So navigate is where do I want to get to in 3, 5, 10 years, both with my financial affairs and my life. Start with life in terms of what you want to achieve and see how much money you need to achieve that. So navigate is the first step. Next, evaluate. So once you've worked out where you want to get to, you'll be working out what you've got, and that will give you a gap. If it doesn't, and if you've got enough money to achieve your goals today, then the conversation's different, because it's, well, can I do this earlier than I expected? And certainly a lot of our clients have come to us, and through the tools that we use to map out their financial life, we've managed to tell them that their goals are more achievable sooner than actually waiting what they expected. So evaluate where they are. If there's a gap, we then plan to fill that. Then we move on to execute. Now the problem is, Steve, with using a word like next, the only X word that I could work out was X-ray, and certainly that doesn't work in this particular analogy. So I've had to cheat and use the word execute and highlight the X in execute. So execute is take the action you need to get close to that goal. So save more, invest differently, and use your tax allowances and do that stuff that might be getting you close towards that goal. And lastly is track. And track is every year review your financial affairs, because number one, your goals might change, your plans might change, the world might change, as we've seen quite recently, and all of that has an impact on your plans. Now, interestingly, and I don't know if you've seen this with your clients, Steve, but a lot of my clients have found that the current situation has informed what they want to achieve in the future. Have you been having any conversations like that?
I think obviously, yeah. I mean, every client, every kind of business is different, but I think it's just done. I think what's done for a lot of people is just focuses the mind a little bit about where you want to get to, and obviously, no one could have foreseen the issues surrounding COVID coming into play. But I think it now just makes it more imperative now, like you're saying, is to actually have plans for the future to determine what you need to do to get to where you want to get to. But with a lot of our clients, I mean, everyone's situation is slightly different, isn't it? So some people have been affected more so than others. Some people have actually benefited from it.
But yeah, no, 100%. But I mean, for a lot of people, our experience is that it's been a time to reflect in terms of what they actually want to do moving forward, and that's been the opportunity of this, as opposed to all of the rubbish stuff that comes with it. That's been actually quite positive, because it's been an opportunity to do that. Now, you can do all this on your own. You can do this without the need of a financial planner. One other thing just to mention is make sure you've got a process in place, whether you work with a financial planner or not, to review it on a regular basis, because effectively when it gets to you navigate, evaluate, execute and keep track once, and then every year the process starts again, because then you want to make sure you continue to remain on track and make sure you do that. Just wanted to share one client story of a client that I saw a couple of years ago. Her name wasn't Susan, but I'm using Susan to anonymise her because she's still a client of mine. Susan came to me, 52, came to me, she'd built wealth, and she said, I'm really not enjoying work at the minute, and I want to know whether I can afford to take some time out. And she was in a position where actually when we ran the numbers, she couldn't. Now, I'm a bit of a natural optimist. I don't like delivering bad news, but part of our obligation as professionals is to tell people the truth, even if it's not the truth they want to hear. So I had to go to Susan and say, actually, you're not on track to do that, do what you need to do next year, but here's a plan to get you there in 4 years' time. and she let out a big sigh, said, okay, I understand that. Now I'm relieved. And I said, why are you relieved? I've just told you that you're not going to achieve what you think you're going to achieve. And she said to me, Chris, the reason that I'm relieved is because now I've got clarity. And I think often in the UK we avoid looking at where we are financially because it is a scary subject. But certainly our experience is that once you're clear on what you've got, and once you're clear in terms of having a clear plan of getting you to whatever point you want your life to be, that's when things turn around. So Susan's still a client now. We see her every year. Her financial plan is still on track to achieve what we need to achieve, and she has clarity and comfort now that she's gonna get there. So that's what effectively a financial planner does. You connected to me online already if you're watching this, but if you need to get in touch with us to talk about anything we've discussed, you've got the office number there, the website there. Feel free to get in touch and have a chat. I like to talk, as you can tell. Steve, thanks for bearing with us on that. Hopefully there was a bit of an insight there. I want to talk specifically about how you help clients, but before we do that, tell us a little bit about you.
Well, firstly, thanks for having me on, Chris.
You're welcome.
For myself, my name is Steve Chilton. I'm an account director for ERB Commercial Risks. I've been working for ERB for the last 3 years. Have been involved in the insurance industry since the age of 18.
Okay.
I, like a lot of people, didn't necessarily set out for a career in insurance, but kind of fell into it, and I've been here ever since. So I will be coming up to the big milestone of 25 years in the industry later on this year. I started off in a high street brokerage locally, which is based in Bromford, which was specialising in covering motorcycles on manufacturer-approved schemes. So it was things like Harley Davidsons, Motor Guzzies, Triumphs, Aprilias, which was on a dedicated authority basis. So effectively allowed the insurer allowed me to kind of dictate a little bit about what the rates would be. Okay. So this never really got me interested in potentially moving into the underwriting arena, which I made that transition and spent about 12 years working in the city as a senior underwriter, specialising in commercial motor fleet and motor trade combined business. Okay. I now currently live in Langdon. I was brought up in Hornchurch, so I'm a local lad anyway. But I think now obviously you're seeing like a lot of people being affected by COVID, and it is affecting me. It's close to home, not just my clients. I was due to get married last month, which has had to be postponed unfortunately, and my partner has been furloughed from her role in the city as a recruiter. So
yeah, it's you know what I think in terms of personal impacts, not being able to get married must have been huge, right? Before COVID, how close were you to getting all your plans in place?
To be honest with you, we should have got married on the 24th of May, so we were just in
you were there.
Final, yeah, we were in the final furlong when lockdown came in, and I think we were probably sitting there thinking, is this actually going to go ahead? Are we going to need to cancel? And then obviously with the high risk people, and obviously with elderly parents and people kind of not necessarily great health, we had to take the decision to cancel it. And when have you rearranged? Fingers crossed. With lockdown being lifted, hopefully, we should be looking for middle of September.
Okay, well that's good. There's light at the end of the tunnel, right?
Exactly. Look, there's been a lot of people that have been affected by what's gone on. Obviously we've been directly affected, but you just got to kind of roll with it and roll with the punches and just kind of and do the best you can in order to make the best of the situation.
The good news is you are still getting married. I had a conversation with my 8-year-old yesterday who said to me, "Daddy, I love you, but can I please go back to school now because it's just getting all a bit much." And genuinely, I think I think actually I'm lucky that I actually really like my family. Do you know what I mean, Steve? Because for people who
I also
are...
like to think, as well as that, I mean, because we're both professionals and we've spent a lot of time out away from home, I think just living in each other's pockets for the period we've done, if that's not going to be a kind of the acid test as to whether you can actually get married and kind of go through the whole situation.
Yeah, 100%. You know what's been interesting for, I mean, because Cassie works for Cervello as well, so we've been, and the doors, even though we haven't been in the office, we only moved back into the office last week. We've been working from home, and the kids have been there, and it's been a real. I think they've had a bit of an insight in terms of the way that we've done things. But what I've realised most is that I tend to use the same phrase quite a lot with all my clients. So when markets went down in the early stages of lockdown, I used the phrase "this too shall pass," like in almost every conversation. So much so, the kids started a bingo card with the phrases that I was using quite a lot. Now, effectively, markets have gone back up since what happened. Not fully recovered, but they're getting there.
They're on their way.
And it's interesting, but then you don't realise that you're doing that, do you? But it was just a phrase that explained the situation quite well. But yeah, so tell us a little bit about ERB.
Well, ERB have been around for 6 years now. They're a fully independent, family-owned, operated business. The business is staffed by local people who live in the area. The aim of the business is to provide a bespoke commercial insurance and risk management to specialist sectors.
Okay.
Our ideals is that we want to build real relationships with our clients. We don't really want to be accepting kind of a pre-packed solution for business owners. We don't necessarily expect you to either. So the idea is that we kind of bespoke and work policy around what your direct requirements are, rather than just giving you a one off the shelf, as it were.
And I'd imagine that underwriting background that you've got helps you do that, right?
Exactly. I mean, and every one of our clients has appointed their own account exec, which is specific to handle their requirements. Obviously, there is a team of people behind it, but ultimately, that you go to is you speak to the account exec responsible. Yeah. But yeah, like I say, we've been around. So we've got a big presence locally, and I say the business is going from strength to strength, and I think it's a testament to the people we've got in the business. Yeah, it's. I mean, in when you're a professional, it's always about people, because our business is about trust, aren't they? You know, you need to work with people you're in a position where you trust. Talk to me a little bit about some of the sort of clients you work with. Well, I suppose. I mean, our clients are very wide-ranging. We do an awful lot of haulage contractors, purely because it's business and relationships that kind of followed my MD who set the business up. But it ranges from construction firms to property developers, manufacturers, motor traders, sports and leisure industry, pubs, restaurants, tradesmen. I mean, obviously this list isn't exhaustive, because our job is to tailor a policy that's specific to your individual needs. Yeah. And we get an awful lot of referral business from other existing ERB clients, and not always from the same background or same trade. But the sort of things we might place could be anything from motor fleet, property owners, commercial combined policies, combined liability, motor trade combined, professional indemnity.
So quite a wide range.
Cover, engineering cover, legal cover. Okay. I'll say that we pretty much, I mean, the way we set up a business is that we respond to what your needs are. So
yeah, I understand. How has the sort of world of insurance changed in the current situation? Because I'd imagine in unprecedented times you need to react to it, right?
Yes, exactly. And I think what ERB pride themselves on is how we actually deal with that, and with our relationships we have in the market. I mean, COVID's brought about many issues, not just for ourselves or the insurers or the end clients alike. I mean, we've had to be scrutinising policy wordings to interpret as to what cover was meant to be given by the policy, because as the press has kind of covered up a lot, insurance companies weren't necessarily intending to cover global pandemics within their wordings. But we've had to be kind of adaptable to the situation and just utilise our strong relationships we have with the market, because all the guys within ERB have long been known to the city, so we have long established relationships with insurers, and that enables us to negotiate reductions to clients on the insurance costs, which for one of the examples is that a construction firm that's with myself, one of my clients, they've got combined liability policy. Now the business hasn't been operating at full capacity because house build is one of the many things that was kind of restricted by the government. We approached the insurers and asked for a reduction on the basis of the fact there's no way they were ever going to kind of hit their kind of levels of, or predicted levels of turnover for the business. In fact, the business effectively not been trading for a number of months. They weren't obliged to give us anything, but like with anything, they want to maintain good relationships as well as we do. So
that's the thing.
25% reduction in these insurance costs.
And that's the thing, isn't it? I mean, sort of what you want to be doing is working with insurers that have got that longer term view of this situation and support your clients when they need it, which is now for a lot of them. Now, one of the interesting things, Steve, is I know that, like, when we look at our business and the risks that we need to insure against, sometimes when we've reviewed what we need, we are underinsured in some areas, and we've had to fill some of those gaps. What are the key things that most businesses ignore as risks and therefore either don't insure or underinsure?
I mean, there's a variety of areas which kind of probably cause issues. I mean, we tend to see people don't tend to kind of evaluate what their rebuild costs are on their property.
Okay,
The businesses aren't monitored as closely as they should be. I mean, a lot of insurance is kind of generated on the basis of the level of turnover and ultimately the wage roll that the business is responsible for. And if you're not keeping regular checks on these, potentially means there is situations with underinsurance, or people that've got fleets of vehicles that don't conduct regular licence checks on their drivers to ensure they're meeting the warranty conditions laid out by the policy. This can have a variety of impacts. I mean, insurers will, and have done on occasion, will apply an underinsurance on the basis that settlement's being reduced by the level of underinsurance and claimed amount. Claims potentially being refused altogether. I mean, I could probably give you two or three examples of some of the cases I've seen over the last 6 months or so. I mean, we had a skip hire that asked us to quote for their combined liability insurance. When reviewing their current paperwork, it suggested the turnover of the business was 60,000.
Right.
But when I was having a conversation with clients, you told me your turnover is 600,000.
Yeah.
You were asking us to potentially get you a policy when you're underinsured to the point of 10 times.
Yeah.
Another client that we picked up was a landscape gardener that his property and his liability was covered. Within the body of his current schedule was a powered machinery exclusion.
Right.
Now, I don't know about you, but I can't imagine an awful lot of landscape gardeners not needing the need of a chainsaw or a chipper at some point over the course of the working day. But there's absolutely no cover in place because of the exclusion. Another company was a construction company that they subcontracted all their manual staff, just effectively just had their office staff covered under their existing policy. Well, obviously, when we're being asked to look and consider quoting for it, the current cover is not reflecting obviously what the business is, what the exposures are. I mean, ultimately you've got a worthless piece of paper there because potentially the claim came through. The risk has been seriously misrepresented.
And this is the
challenge. You
challenge.
don't really have any idea what you're doing or what the exposures are, and it potentially would have involved in insurers potentially reviewing it, they probably would have cancelled ab initio and just kind of refused any claims against it, because the policy wasn't so much as a reflection of what he needed, what he was actually doing, and I was being asked to compete against a premium of about 4,000, but I'm like, well, on the basis of what you do, the correct premium is 28,000, which he couldn't possibly budget for because he was used to paying £4,000, but it wasn't a policy that would ever have covered him when he needed it. So
but this is the challenge.
Always an advocate, if you're going to pay for a piece of paper, make sure it covers you when you need it.
But this is a challenge, isn't it? I think people, and certainly we, when we're protecting people in the event of death or illness, you've got to have full disclosure, because the last thing I want is somebody to pay a premium to cover a need. And for the sake of saving money, it gets to a point where they actually need it. And for our clients, that will be when their family needs it, potentially. And actually, they've paid all that money, but it's worthless. You know, that disclosure element is so important, isn't it?
Yes, exactly.
Yeah. So I've heard a little bit about packaged insurance, particularly for businesses. What are the sort of pros and cons of having a packaged cover? And what's the difference between buying that and individual plans?
Well, packaged business is ultimately target a SME business. And when I say SME business, it basically small, medium enterprise businesses.
Yeah.
These tend to provide an array of cover under one policy. And it could be the buildings, the contents within the buildings, cover for public liability and employers' liability, cover for money that's held within the business interruption in case something happened that prevented them from generating any income, terrorism cover, legal expenses cover, goods in transit. I mean, not all things. You have a degree of all these cover thrown in for what appears to be for nothing, because that tends to be what happens with package policies. Right. They'll bolt on all these covers, which can seem quite appealing, but not every client will probably have a need for some of these covers.
Yeah.
And they may never have a situation arise when they would ever need it.
Yeah.
I mean, certainly we were looking at a business that had its own premises, had its own equipment it was responsible for, and a number of staff working within the business. Yeah, we would recommend covering under one arrangement. Because ultimately, if it's all with one insurer, it's a lot slicker when dealing with claims, and the fact is potentially, like I say, it's the ease of having it under one policy. But not all businesses will potentially need this. Businesses with limited turnover, or a business that may be mainly mobile rather than working from a set location, would potentially benefit from having a more bespoke review of what their needs are. I mean, some of these products seem to have lots of bolts on, seem to have page upon page and page of cover, but it doesn't necessarily reflect what the ultimate business is or what the exposure is.
Yeah.
But I think this is the whole point here. I mean, what we do and what you would do is that we would review what the client's needs are. Yeah. And we would bespoke the policy in line with what their potential needs are. And we'd recommend the differences. I mean, yes, we could sell them a package policy, but ultimately what we'll be saying is this covers you for this, covers you for that. Do you want it? Do you need it? And like I say, evaluating what the business is. I mean, the whole point of it is bespoking to what their needs are, rather than just providing a simple package policy. And
it all goes back to that thing, Steve, doesn't it? You know, that, look, just don't buy a product, understand your own needs, be it from an insurance perspective or from your own financial goals, or even your business's financial goals, before you do anything else. Because if you go out and buy a product to solve a problem, you need to know what the issue is first. You need to understand what the challenge is, and a lot of people have the tendency for that quick fix. And as you say, what you're saying is just take some time to plan exactly what you need, right?
Well, this is it. I mean, the first thing we do with any of our clients is sit down with them and say, right, tell us about your business.
Yeah.
What it is that you do from start to finish.
Yeah.
And it's from there, when we understand the business, we can see where the potential exposures actually lie.
Yeah.
it does amaze me sometimes that when we go out and we sit in front of a client, I mean, it was a bakery we went to this time last year, I think, and they had a whole host of new ovens that were put in, of which they'd spent a considerable sum of money to put in place. And it was like, I can't see that you've mentioned this. There's no mention of it on your existing paperwork.
Yeah.
Oh, well, we haven't had a conversation with insurance. Why would you invest a seven-figure sum on new equipment and
not include it? Yeah, not include it. Yeah, I think sometimes that's the benefit of having a relationship with somebody like you, because you're going to highlight those risks that might be new and that those businesses take for granted, but they can't, can they?
Exactly.
Just help me understand a little bit about the weirdest risk you've ever insured against.
I mean, I wouldn't say this. I'd probably say it's best to say what unique cases we've been asked to review over the years, rather than as opposed to unusual, because responding to what a client's needs are is what we do.
Yeah.
I suppose from a personal perspective, I can talk about some of the cases that I've covered over the years. I've covered a number of Premiership footballers. I was responsible for Harrods insurance arrangements for a number of years. I was responsible for quite a sizable fleet with Legal and General for a number of years. In previous guises, at one point I covered nearly all of the road trains in the UK that were actually in use. But I suppose, looking at some of the other cases I've dealt with, I suppose one of my most challenging ones was back in 1999. I was approached when I was then as an underwriter to write a policy to specifically cover a get you home arrangement, which was basically a business that's set up. They've got these drivers, got foldaway scooters, and ultimately what it would do is they would turn up at the destination, fold away the scooter, put it in the rear, put it in the boot of the car, take your car, drive it to your home, and then take the scooter and then drive it off again.
That was really prominent, particularly in London.
It was really prominent. I mean, it was there was a number of companies that kind of followed after I wrote that first one.
Right.
Back in those days. But I mean, I'd say at that point there wasn't really a policy in force that had ever covered it.
Yeah, and I suppose when new business ideas pop up, you know, the insurance market needs to adapt to reflect the new risks that pop up as well. Yeah,
and I think, I mean, as a business, you have to be innovative.
Yeah,
you have to kind of work around a problem rather than just seeing it as a problem and thinking, how do we do that? Well, there's a problem. What's the issues that surround it? Why would you normally say no to potentially doing something like that? And then, what parameters would you consider covering it for?
Yeah.
And like I say, it's that being innovative and bespoking to what an insurer is prepared to actually cover, and obviously what a client's needs are. And like I say, it's that level of negotiation that's required to do what we do. Yeah,
amazing. Where can people find out a bit more about you and ERB?
We're based in Emerson Park. We're based at Wickham House, which is Buttsgreen Road in Emerson Park in Essex. You can contact me directly via my email, which is Stephen with a PH .Chilton CHILTON @erbinsurance.co.uk. Our office number is 0203 866 9952. You can reach us on our website, which is www.erbinsurance.co.uk. We're on Facebook, we're on LinkedIn, and we're on Twitter. Essentially, obviously, we're in lockdown at the moment. If anybody wants to potentially have a Zoom face-to-face chat, as it were, I'll be more than happy to do this. As and when the restrictions are lifted, I'm more than welcome anybody in to pop into the office, have a coffee, have a chat, see how we can help you. But otherwise, the ERB team is ready and willing to offer support and advice. So let's just try and help you navigate through this period and help you with whatever your needs are in the future.
Yeah. How are you?
I think just on another personal note anyway, because there is a number of people that ask me the same question. ERB insurance, which I know a number of people refer to it as, is it herb insurance? It's not herb insurance, it is ERB. It does stand for the Managing Director, Lee Banks. It's his daughter, which is Elodie Rose Banks.
Okay.
And she does and has been known to come to the office to crack the whip when she needs to.
Well, I've got my eldest daughter sitting here, who is literally the one. She's staring at me now, Steve. She didn't want me to get her involved, to be honest, but she's my tech support, and certainly any mistakes that I make on these live shows are mine. Anything that goes right is typically hers, so that's the reason. That's the reason she's there. But we get that with the name. Like we get weirdly, there's a two-folded one for me because our surname's my surname's Flemish. I get Deans quite a lot, but I've had letters through the post saying Chris Dreams and Chris Dooms. And then when we picked the name for the business, we always get people saying Cervello or Cervello. We should have made it easier on ourselves, to be honest, but we like it now and it's staying. So we're not going anywhere with that. Thank you so much for joining us. I really appreciate it, Steve.
Thank you for the invitation. I appreciate giving the time to talk about ERB.
Yeah, no, absolutely no worries. I really loved it. Hope you enjoyed it too, and I hope you've learned a little bit more about how to achieve your own financial goals, as well as learning a little bit more about some of the risks you need to consider, particularly if you run a business. Have a lovely Thursday, and we will see you next week for another edition of Cervello Live. Thank you.
Thank you very much.
Bye.